Welcome to Arabella Capital. We are excited about sharing our knowledge and experience and information in real estate investing and either helping you get started or helping someone more seasoned and experienced grow into a larger company or a more efficient company, or at least just getting more lifestyle and more of your life back. And so I hope these principles and strategies that we talk about today are going to help you. And please like and subscribe. Let's look at the big picture, how you're going to put this together. You want to invest in real estate, or you want to be a full-time real estate investor or operator, you need to understand that your investment strategy is just a business plan. Depending on how much experience you have or how much experience your partner has in executing on these different real estate strategies, whether it be buying in single-family homes, flipping, buying apartments, investing in all the various ways you can invest in real estate, you've got to have a strategy or a couple of different strategies that you're comfortable with or familiar with. And then that's it. Everything else is investing on principles. Principles like keep your leverage low, execute on a budget. Your business needs to be on a budget, your properties need to be on a budget, and you need to be liquid. Cash is king, you need to have liquidity. And don't get overexcited. So this is a long-term game. So I've never been able to play Monopoly in less than 4 hours. That's just the way it is. So be patient, be patient, be patient. You're investing on principles, like I mentioned earlier, not just liquidity, but moving quickly, time is of the essence, location, understanding your demographics, buying low, buying right, holding and selling at the right time. These are all strategies, and these are principles that you have to invest with. And the strategies are going to be based upon your experience or the experience of your team. What type of real estate can we invest in, and how can we execute that strategy? Just remember one thing: if you're building a real estate portfolio, cash flow and liquidity is the basis of your portfolio. So if you have a strategy that requires more work and more effort, your higher return strategy needs to be a smaller part of your portfolio. The larger part of your portfolio needs to be your stable income strategy, because that income will stabilize your portfolio. That will give you flexibility to do other things that you think are more fun. So in investing, if it's boring and predictable, then you're doing it right. Investors don't want surprises. They want predictable growth and cash flow, no surprises. So if you want to do those things that are exciting and more fun, that needs to be a very small portion of your portfolio. You don't want to just go out and try to figure it out and see how it goes along the way. You really need to not just have an investment strategy, but you need to have a strategy that you're comfortable with because you've done it before. So the more experience you have in executing on the various investment strategies that you could apply to real estate investing, the more successful that you're going to be. So how do you decide what your investment strategy is going to be? Well, it's geared around your experience. A lot of people, when they look at real estate or they look at getting into real estate, they're thinking, well, it's a lower barrier of entry if I get into single-family homes, and they look at flipping houses, they look at holding single-family homes as rentals. Flipping houses, by the way, is technically not real estate investing. That's a real estate job that you have to do. Investing in real estate and buying it, whether you're renovating it or you're building it, leasing it up, holding it for a period of time, letting it rent out, that is technically real estate investing. You're investing in something that you feel like is going to perform well over time, which real estate generally performs very well over time, especially compared to other alternative investments or other investments like a paper portfolio, the stock market, something like that. But ultimately, you just got to look at what your experience is and what your risk tolerance is. What can I afford to do? I've said before that the easiest way to get started investing in real estate is to buy a house, live in it a couple of years, buy a modest home, live in it, move and rent it out, move into another modest home, and then rent that one out. That's the easiest way to get started. And if you can find the right real estate professionals to guide you along the way, that helps as well. But you really have to have a strategy, and your strategy is just going to be based around your knowledge and your experience. So let's talk about changing your strategy as the market changes. So going into, think about the '08 recession. At the time, I was doing mostly financial planning, investing in stocks, and doing some real estate on the side. 2009, I looked around and there were so many amazing deals. The real estate market values had dropped so much. I decided, okay, we're going to focus on single family rental homes. That's a low risk. Single family rental properties are typically a lower risk because everybody needs a place to live as a primary residence. That's what they're used for. So I invested in that, ran that till 2016, when that asset class kind of peaked out in 2016, at least for the really nice returns that we were used to. And then I looked around and I said, okay, what's the next opportunity? My idea was, let's focus on new construction. There's a bigger margin there. And there was a bigger margin. And when I got into it, I looked around and realized that, okay, I want to be safe at the same time. I want to mitigate my risk. So I want to focus on entry-level housing that we can rent. And ultimately decided that developing an entire community of entry-level rental homes was the safest way to get the highest return on our investment at the time. So it's one thing to see something coming. Now you can't time it, but you can see the seasons changing, and your job is to prepare. That's it. Your job is just to be prepared, to buy at the right time and sell at the right time, and buy the right type of product and sell the right type of product. So, and you have to understand the demographics to understand the product. But the important thing is you've got to pivot quickly. When you see it and it's time to pivot quickly. And we've pivoted probably 5 times in the last 12 years. And our real estate fund that we have, it's a growth and income fund. So my job is to figure out how do we get the maximum growth while mitigating risk, and how do we get the maximum income today while mitigating risk. And a lot of REITs they're limited to, they have one strategy. And when that strategy doesn't work, they have to wait and see. And they just kind of sit and wait till the market comes back. Whereas we have the ability to steer. The ship's not too big. And we're structured in a way that every 90 days we can change and pivot if we want to. So we can move quickly with the market and adjust, and that's what we've been able to do. And because of that, we were early in single-family rentals. We were early in build-to-rent. We were early in vacation rentals, and now here we are again. We have assets that actually cash flow, even though we have high interest rates today. So we're excited about that. If you like some of the principles and the strategies and things we talked about today, go take a look at arabellacapital.com, and you can see our fund and the properties and the strategies that we're applying, the type of assets, the type of locations that we're focused on. You can see the deals that we've already sold and the track record there, and you can see some of the strategies we're doing today. It's very specific. Everything we do is very intentional, so I hope you enjoy the information.